welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? We are financial advisors that like to talk about the market, can talk about the market, and more importantly, like to teach about the market. So hopefully you're enjoying what we have to offer. If not, just go back, watch some other videos. That'll be all great there. One song I wish we could put, we can't do it, Serpentine Fire by Earth, Wind, and Fire, man. I wish we wouldn't get copyrighted. Like, I should just go ask them if we could just use that song. You know what I mean? Yeah. The bass player. I like the bass player. But what if you think we just ask nice? They're not going to be using it much longer. You know, it's like, maybe we cut them in on some of our $6 that we make here. Anyways, let's talk about the stock market here today, because exactly what we've been talking about is happening. And I'm one of those, I'll always tell you, I love to tell you ahead of time instead of say, I told you so. I can't stand those people online that go, I told you to buy that. I told you to sell that. No, you didn't. Stop it. So if I could teach you ahead of time why something is happening or about to happen, I think you get more from that. So one day when I, win the lottery and I'm not here anymore, then you'll at least know how to do that. Keep getting your dough straight there. So let's talk about this, because we are so close to hitting a new bull market. If we just tick over that high right there, then officially we'll be up over 20% from the lows, which triggers a technical new bull market. Even though that might be hard to swallow a little bit, that would be actually where we stand there. Now, we know that there's been a handful of stocks leading the way, right? NVIDIA, Microsoft, right? They couldn't lift the markets today. They took a break. What did we just talk about? That's not even the point that I'm trying to make today. We just talked about that. If there's only 7 stocks going up, what happens when people just simply say, I'd like to take a little profit. Let me sell a quarter of my position, right? Not everybody's investing for the long term. And so that happened in all of them today. Look at that. Just a pullback. Well, what happens to the market? I'll use the SPY so you can follow along. What happens to the market when the biggest, baddest players in the market aren't participating for the day? It really doesn't matter what the rest of the market does. You look around the market and go, okay, wow, Ford was up 5%. No impact on the market. Like zero impact on, energy. We saw oil going higher today. Marathon Petroleum, nothing. It doesn't matter, right? Because those 7 stocks, most of them, I think Apple, was it down a touch maybe? Okay, slight down day there, 0.75%. Other than that, those 7 stocks didn't want to participate. Even worse, you have the NASDAQ. Oh, big pullback there. That's what happens when things get extended. It's incredibly difficult to figure out the day that they will be considered extended. I'll give you that. But when you know that, and I've been pointing out to you, like, do you feel like you have to put money in a market right now? Is this where you want to be at this very moment? So hopefully that helped you avoid some things. Now, let's say, because I know the questions I'm going to get. I can already tell you guys, right? I'm learning personalities here. The next question I'm going to get is, NVIDIA's pulling back. So can I buy it now? Well, if I can't buy it now, Dustin, where can I buy it? I just know that's going to be the question. I want you to look, if you imagine the valuation here, right about this point, a touch higher and it would have been worth $1 trillion. I want you to stop for a second and pretend this is a business, which it is, but like a lemonade stand or something, right? Something you can imagine investing in. I'm going to go over here and we're going to look at a handful of businesses. Now, the further to the right that we go, the more that business thinks it's worth, and mostly rightfully so, right? So the further to the right, the higher value that business has. So you want to invest in an expensive business or someone that's worth a lot more, or you want to invest in a smaller business, all right? So naturally, Apple actually got cut off. Apple should be in the corner there, but let's say Microsoft right here in the far right there. All right. As far as you guys can see, it's the most expensive business. Truthfully, Apple is, but you can't see it. So Microsoft, very expensive. The y-axis is sales. So you would think that in the world of business, the more sales you have, the higher your worth, right? That's how it goes for our business. That's how it goes probably for yours if you have a business, but not in the stock market. It's a little bit different. Look down here at the bottom and go to the left. You see NVIDIA there. Right? For some reason, you can't see my cursor, but you see NVIDIA. I put the ticker for you there. NVIDIA, almost worth $1 trillion. Do they do a lot of sales for that? No, we're just barely up on that y-axis there. It's a visual way to see it. In fact, slide to the left. Do you see Visa off to the left? Visa does more sales than NVIDIA, but NVIDIA is worth twice as much, right? How can that be? So if you were just looking at individual businesses, you had no idea, you'd probably focus more on, well, Johnson & Johnson, now I'm not telling you to buy this, but Johnson & Johnson has more sales than Visa, but it's worth about the same amount. I'll take the company with more sales. Why would you do that? Because if sales drop, you still got a decent discount on the stock, but you have room to compete with the other ones. If NVIDIA's sales start to drop, I don't think that happens, but you get what I'm saying. If they start to drop, we have this extremely high valuation for a company that's doing very little in sales compared to others, right? Obviously, they're doing well. So when you go back to this stock here, you go, this is NVIDIA. Is it worth that amount given the amount of sales they're doing? No, it's definitely not, right? What you're paying for is the assumption of higher sales. That's why you see NVIDIA at the valuation that it is. So really think about that. And one last thing, look at Amazon. Shouldn't Amazon be worth the most? Now, I get it. There's a whole lot more to get into, like the profit they have on these sales and all of that stuff. This is just plain Jane talk right now. Amazon has more sales than everybody, but it's not the most expensive company out there. Right? So if you saw that, you go, well, is there room for Amazon to grow its valuation, meaning the stock price to go up? Further research, right? You could do that there. ExxonMobil, pretend the ticker doesn't exist and you just saw that dot. Wow, second highest sales of everybody? Huh. But its value is not as large as NVIDIA that barely does any sales compared to them? Oh, all right, maybe I'll take a look at it. So you would not do that and make a decision about investing. However, that gets the ball rolling. You look at that and say, well, maybe I could quickly navigate to a direction or to an industry or sector and start thinking that through a little bit more. So just want to point that out. Okay, back to the goods here. I want to point this out. Materials, that's your second day in a row here. Remember, we talked about that yesterday. These are cyclical sectors. Industrials, the same thing. This is belief that the economy and everything is getting stronger and will remain strong. People are making that shift there. That's an interesting shift, right? That is a belief on a strong economy. If you don't know materials and industrials, just think about planes, trains, and the steel that makes them. That's the easy way to think about it there. So, for example, planes, Boeing, right? That's planes. That's pretty much all we got there. You got remember Kansas City Southern merged with Canadian Pacific. So trains in this case is Canadian Pacific, Kansas City Southern, Union, whatever they call themselves. Obviously doing really well there. That's going to be a part of it. The steel that makes them, U.S. Steel, bam, right? Planes, trains, and the steel that makes them is what currently theme is going on in the market. The NASDAQ here, this is the rotation that we talked about. We talked about it yesterday, last night on Jazz After Dark. We're going to talk about it tomorrow on the podcast. The rotation from large caps has to go somewhere. And there's a reason why, we talked about it yesterday, why this rally's going to end. I'll mention it again tonight. Why that rally is going to end in the short term. Money is not allocated correctly. We need to rebalance thanks to the big move that we've had in these large cap stocks. That money has to go somewhere. Where did it go? Small caps, right? Took me a second, but I got there. Small cap. Why would small caps just be taken off like this? We've already talked about it, so I'm just reiterating, right? It's because money is leaving large caps, rebalancing to small caps. And it's because your 401k is going to do the exact same thing. That's what's causing it. Nothing's changed. Nothing, interest rates are going higher there, so that's not helping. Nothing's changed here. Banks may be recovering a little bit, but other than that, that money, that's all rebalancing money. If you can know that ahead of time, can't you participate in that? Well, we talked about it. I love that stuff there. Also, there we go, bonds. So bonds, rates higher today. So whenever prices go down, that means rates are going up for literally no reason at all in the U.S. There's no news. In the U.S., there is no news to move the bond market today. You know what the news was? Canada sort of surprisingly raised rates a quarter point. And Australia did it yesterday, right? That's what moved our bond market today. That's how little news is out there right now, just to point that out. So remember, who's the most sensitive to rising rates? The tech sector. Well, if the tech sector is already sensitive to rising rates and there's already a seriously big profit to be had there, that's two good reasons to take some money off the table, go put it somewhere else. That's all you're seeing in the market right now. Remember, sometimes returns are not based on picking a winning stock. Returns are about recognizing extreme levels and then going, where will that money go? Well, 401ks have to rebalance. If I have a small cap fund and a large cap fund in my 401k and it rebalances, money comes out of the large cap, goes into small cap. Times that by millions of people out there on the planet, that means a lot of money is about to go into small caps. Sometimes that's where that extra alpha or added returns comes from. We mistake that sometimes. We think, oh my God, you have to be a great stock picker. Well, that helps, but certainly not 100% of the game. Also, lastly, I'll just point out gold. Remember our talk on that? When gold was tearing off here and everybody's saying, you got to be in gold, combat inflation, rising interest rates, whatever. We talked about how gold has fits and starts. It'll take off and then do nothing. Then take off and do nothing. I even shared all the data with you. What's happening now? I hope you didn't chase gold. I know of one person that did. If you chase gold, now look at it. You're sitting there with no volatility, nothing you can do but sit and hold. That's the worst position to be in right there. I would not like that. All right, we're going to have a real estate talk real quick. You all right with that? How are the prices of homes and everything going out there? We have you probably could guess, right? We have less inventory out there, which has caused prices to stabilize. Realtor.com puts out the data. This is not my data. I just mock it up for you. Realtor.com, here we go. So the left chart. Number of active listings in blue. Active listings are falling. That means inventory is getting tighter, of course. The number of new listings falling. Of course, that means we don't have new homes coming to the market. Inventory is nearing a low, not quite all-time low, or recent low, but still. We have a decline in active and existing listings. That means there's less inventory. That should be good for house prices, right? Come on over to the right. Median listing price, we're looking at two ways they gave it to us here. The listing price, so you can say the median listing price is about $435,000, somewhere in there. And then price per square foot. The most important thing to take a look at is it is stabilized. It did not pull back. There are not prices falling left and right, especially here in the Tampa area. Prices have stabilized. Why did they stabilize? Low inventory. Take it a step further. Look at by region. So we're going to take a look at the number of active listings by region. Declining in the southeast here, declining in the west, declining in the northeast, declining in the Midwest. Only the southwest of the United States is seeing a slight uptick in the number of active listings. So again, across the world, or across the United States, we have lower inventory, which is causing prices to be stable, which means if you're a seller, I don't know where you're going, right? But if you're a seller, you have a tiny bit of that upper hand at the moment because you're not competing with as many other people out there, all right? A little departure from what we normally do, but, well, it's kind of quiet out there. Boeing. So you would think is nothing but bad news with Boeing if you were to look at financial media. However, it's not that big of a deal. So Boeing has a slight issue on aircraft that they have yet to deliver yet. That's the good news. So they're going to fix this. They have what's known as a shimming issue on the horizontal stabilizer. So I'm a pilot, you know, I could say things like that. It's a bit of a shimming issue on the horizontal stabilizer. It's going to take about a week or two to fix those things, you know. But they have the aircraft. They literally just go out there and change it. It's not a big deal. Once you look deeper past the shocking headlines of what happened, it's not really that big of a deal. Campbell Soup was one of your bigger downside movers here today and extremely now sold off to the downside. They beat on earnings, but prices paid versus prices sold is the issue there without getting into all the exciting world of soup. Remember, I told you there were two companies that were going to report earnings in the S&P, Smucker's and Campbell Soup. There's just nothing exciting. I mean, how do you can't talk long about that. You know, it's soup, for God's sakes. All right, so Stitch Fix. The big news here is they're trying to be profitable, and they're not consistently profitable by any means, but the stock was up 28% today. They beat on earnings, and they said, we're going to continue cost cutting in an effort to become more consistently profitable. Well, that's what we do in business, right? Thank you for taking the effort to do that. They have to do that because they're not going to get any more investors. If they don't get any more investors, they're going to have to raise money. If they're going to have to raise money, interest rates are higher. It's going to cost them more. They can't support high cost debt at the moment. So I would almost say, good job. You know, that's what you need to do. Should have done it a while ago, but that's what you need to do. So obviously investors are rewarding that as well. Tonight on Jazz After Dark, we are going to talk about this rotation. Right? No, that was yesterday. It's already up. It was yesterday. Man, I'm getting my days mixed up. Yeah. Okay, so you can actually go watch it now. I forgot I already did. So talking about the rotation from large cap to small caps, why that's affecting the market, or I presumed would affect the markets at the time, and now is actually doing that. So feel free to check that out. And we'll see, bull market or staying in this nothing type market. I think we'll touch the bull market, actually, but it may not be tomorrow. So we'll see. We'll be back tomorrow to talk about the markets all over again, teach you stuff, learn you something. And if you enjoy working or watching someone that likes to teach, wait till you see what you get if you join us here at Jazz Wealth. Check us out. Adios.